Hey guys, and welcome back to the channel. If this is your first time with us, my name is Alex. I'm your Hawaiian guy here in Canada, loving life. Here on this channel, we like to talk about all things regarding investing. I give you my top stock picks for the month, tell you why those particular stocks are poised to do well. I do answer questions that you send to me in the comment section, try to clarify a few things for you. That sounds like something you're into? Do me a favor, become part of the family. Share this video, share this information with somebody that might be new to the market, that might have the same questions you do. Hit that subscribe button, hit that like button, become part of my Hawaiian family in Canada. All right guys, let's get into it. All right, let's get into today's video. Before I give you my stock picks for today, I want to answer questions I received. And that question is it a good idea for Canadians to invest in US bonds? And I would have to say, it really depends on if it's a government bond or a corporate bond. But on top of that, me personally, I would not invest in a US bond because the interest is actually different in each country, Canada and the US. While it is a great idea to diversify and to have a very global portfolio, I just think that international bonds kind of expose Canadians to currency risk. On top of that, when you look at the average stock in the market, stocks tend to earn annually about anywhere maybe 10 to 12%, maybe a little bit more, maybe a little bit less. But when you look at the average bond, I know in the US right now, a 10-year bond is about 1.3, maybe 1.25, somewhere around there. And that means that annually you're definitely guaranteed to gain that 1.25%, 1.3% interest. But if you, for example, if you had $10,000 in a US bond, a government bond, and you're getting a 1.30% yield annually, at the end of 10 years, you just earn yourself maybe $1,300, $1,400. So now your $10,000 is worth about $11,300, $11,400. Versus putting the same money into the stock market that has an annual equity of maybe 10 to maybe 12%. That $10,000 after 10 years, you're looking closer to $20,000. So in my mind, I really don't see the point of buying a US government bond. Well, actually, in that case, even Canadian bonds are only about 1.13, maybe 1.25. So if you're looking for security at that guaranteed whatever percent, bonds are definitely a way to go for you. Me personally, I wouldn't do it.
But it's been idiotic to own long bonds. During the last, I talk about this in the report in terms of it's just been idiotic. And big public pension funds and all that, they sat there and they own bonds. Now, they may have bought them on a 4 or 5% basis, but if they go to a 3% basis, they're selling way above par. The way people think about it is they do some very silly things.
I understand a lot of you guys right now are looking at your portfolio, you're looking at those stocks, and there's a 5% dip or a 10% dip, and you're really worried, should I sell, should I sell?
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all.
Like I mentioned in previous videos, during times of correction in the market, this is when you should start thinking defensively and what type of stock should you add to your portfolio. And I've mentioned this before that one of my favorite ETFs, this is Vanguard S&P 500 Index ETF. This is an amazing ETF, ticker VFV.TO. It's trading about $86.31. This is an excellent ETF. They have shares in Apple, Microsoft, Amazon, Alphabet, Facebook, Tesla, Berkshire Hathaway, Charlie Munger and Warren Buffett. Berkshire, great, phenomenal company. Johnson & Johnson, JP Morgan, Visa. I mean, you're getting a little piece of the best 500 companies out there to offer, and you're getting this for $86.33. Again, ticker VFV. This is a great kind of, I hate to say recession-proof, but a really great defensive stock to put in your portfolio. You're not going to see huge gains, but you're not going to see huge losses. And it's a great place to kind of park your money and just grow over the next 5 or the next 10 years. Like I've always said in all of my videos, if you're looking to get rich in the next 6 months, go to the racetrack, buy a lottery ticket, The stock market is not a place where you should be gambling. I mean, I know a lot of you guys out there are looking for those quick turnaround stocks like GameStop or whatever, those little penny stocks that'll flip over in a couple months. That is not typical of what the stock market does. When you're putting your money in the market, look at it for a 5-year time period, 10-year. For me personally, I'll look 10 to 20 years. When you put those limitations where you want to make money, when you want to double your money in 6 months, you're just gambling, right? Put your money in the market, let the money work for you. It's going to take time to grow. I'm going to give you a few other ones. I'm not going to go into too great a detail because all of these companies you are very familiar with. Again, all of these companies I'm going to tell you about are really, really great kind of recession-proof companies and definitely worth a gander. The first one I have for you is Target Corporation. Maybe some individuals here in Canada might not be familiar with Target, but it's kind of like it's like a 5-star. I hate to say 5-star, but it's kind of an upscale Kmart. It's kind of similar to an upscale Walmart. But Target, great company, ticker TGT. It's trading about $175 today. The next one I have is Lowe's, which is kind of a DIY store. Ticker LOW, trading about $159.21. Great recession-proof company. The next one you guys all know, Nike. I don't know about you, but I think I got 3 or 4 pair of Nike shoes downstairs. And Nike, ticker NKE, trading about $134.78. The next one I have, Walmart. Again, I shop at Walmart 2 to 3 times a week. Walmart's a great discount company. Ticker WMT, trading about $129.92. Kind of discount stores are really the stores that do well during like corrections or recession times because people don't have the cash or to actually go out and buy these great name brand things. They actually tend to go more towards discount establishments, which is why a lot of these companies do really well during recessions. The next one I have, Dollar Tree, ticker DLTR, trading about $98.20. Here in Canada, I'm actually in BC, so the weather is really great this weekend, and I did a little barbecue, and I went and I bought some tongs and a gate for the barbecue grill, and I love Dollar Tree. They got some phenomenal stuff that's really cheap, under $5 for the most part. Great recession-proof company. And the last one I kind of touched on a little bit, Home Depot, DIY. Ticker HD. This one's a little bit more on the expensive side, trading about $258.12. But every little home project I've done, I've gone to Home Depot. Like I said, all of these companies I just mentioned, these are really, I hate to use the terminology recession-proof, but they do really great doing a correction in the market times. They're all discounted type of establishments that normally individuals who might be pulling back a little bit on spending, they tend to go more towards these value stores. Great companies to take a look at. Keep on your radar. Like I always say, before you purchase any stock, make sure this particular stock is right for you before you spend your hard-earned money. If you like the information here, do me a favor. Subscribe, like, give me a comment. Tell me what you think about these companies. And until I see you next time, aloha.